The management of Adani Wilmar also joining us on the show, Mr. Angshu Mallick, the CEO and MD, and Shrikant Kanhere, the CFO of the company, joins us on the show. Thank you, Anshu, as well as Shrikant, for making time and speaking with us. The numbers are just trickling in, but I want to discuss the edible oil performance with you to begin with, because the volume growth of 4% seems on the lower side. What do you think the rest of the year is likely to be, given the festive demand will also kick in Q3?
You see, when you look at the edible oil, the 4% growth is the total, but when you only look at the consumer pack, it has grown by 12%. So in that way, it is good. But the H1, that is the first half, we have seen around 23% growth in packed oil volumes, which is very significant looking at all the past years behind. Now, normally the second half of the year is considered to be better in terms of offtake. One, because of the festive season. Second, a big marriage season coming from 15th of November. And overall, the economic buoyancy is much bigger and better in the second half of the year.
That's very interesting, Angshu, that you're pointing out that big marriage season, big Karwa Chauth. In fact, some other trade bodies of the country are also saying that it is likely to boost, sales of edible stuff, consumption items in particular. How significant can this be for your kind of business?
I think for us, it is a very significant business because we are in the basic staples. Out of home consumption requires edible oil, basmati rice, wheat flour, maida particularly, atta also. Then there is pulses, there is besan. All these products are essential requirements of any big marriage season. We see a great opportunity in our Horeca business. We are finding almost 50% growth quarter on quarter because out of home consumption has really gone up from October 22.
I want to get Shrikant Kanhere also into the conversation. Shrikant, hi, thanks so much for making time. I just wanted to ask you about the profitability of the edible oil segment, because you do mention that you expect it to come to normal levels in terms of gross margin and EBITDA per ton in the second half. What are those normalized levels?
See, I think on edible oil, unfortunately for the company, Q1 and Q2 was not good. And as we explained earlier also, that's basically because of the disalignment on the hedges as compared to the physical prices on the ground. I think, but this problem is behind us, and therefore the oil prices have also been stabilized. Whatever problem we had in Q1, Q2, we don't expect that to continue in Q3 and Q4. And having said that, and as Mr. Mallick mentioned, that we are quite growing strongly on the volumes, whether it in terms of oil or a food or industry essential. So in the Q2 and 4, I think we should be able to recover whatever we have lost in Q1 and Q2. But as rightly said, oil loss is basically on account of the hedging loss, which should not happen as we go forward.
In addition, we have a one-time loss of entry tax in West Bengal, so that also has been included in this quarter.
Right. Angshu, just want to understand, apart from this quarter-to-quarter kind of a run rate, the overall strategy of kind of de-risking the business and reducing the cyclicality from edible oil in particular to other, other consumption items, how is that strategy moving?
See, as a strategy, we embarked that on a journey of creating a holistic food and FMCG company. Now, edible oil is obviously a big part of the business. Surely it will continue, and we have expanded, and today with around 18.5-19% market share, we are continuing to grow on it. But the main focus is now on the food business. And as you see, the food business has been growing rapidly over the quarter on quarter. This quarter, we have grown by 50% over last year, same quarter in domestic market. What has not gone well is the rice exports, which got restricted because of the government regulations. Otherwise, the food business is growing. This quarter also, we grew at 20%. Now, going forward, our strategy is to grow this business much faster. I can tell you today, atta business, branded atta business is growing at around 15 to 18% year on year. And India will see a big jump in the consumption because hardly 12-13% is now branded. So going forward, we will see like edible oil 60-70%. Then you can imagine what kind of volume. Basmati, non-basmati rice, pulses. Each of these products are growing very fast in terms of branded. Second, e-commerce is adding great value in branded commodity business. And we, being a good brand, normally have a better market share in e-com than general trade.
Sure. So you're talking about market share improvement, etc., and you talked about, how, of course, you're deepening your presence in rural India as well, where a lot of your products get consumed. But there's export market as well, right? Because the Indian diaspora is also increasing their consumption abroad. What's your prospects with respect to the export going forward?
See, in exports, we have a two-brand strategy. One is Fortune and one is Jubilee brand. We now export to almost 50 countries, and we are now exporting branded atta, Chakki Fresh Atta Fortune, to Europe and US also we are sending. We are there in Middle East, full Middle East, Southeast Asia, Australia. So basmati rice, non-basmati rice, branded, edible oil, frying oil, bakery fats, all these products are now going across. We have introduced biryani kit, and I have got very good response from few of the markets where it has been launched. So each of the products for the Indian diaspora, we are trying to get into and do real marketing and distribution in these countries.
Yeah. But Anshu, I wanted to ask specifically on rice, because all of these export curbs have been levied. There's a lot of to and fro as well. That must be impacting your business and volumes.
Yes, so far at 1200 MEP price, it was impacting, and we had big orders in our hand, little lower than 1200. But now that 950 has been offered, so our all consignments are ready to be loaded. I think from the first week of November, it's getting loaded, so that we have big orders in hand. Apart from that, our atta business is doing well. We have started importing wheat, and against that we are exporting branded atta, and that demand is increasing. And sooner or later you will find that our portfolio, we are expanding in a big time for the Indian expats abroad.
Gentlemen, on that note, we let you go. Really appreciate you making time and speaking with us. So that's the management of Adani Wilmar talking about how second half of the year is going to be better. First half, of course, the volumes have been hit, and now prospects for even exports is improving, and the contribution from the branded portfolio will continue to increase, and that will help the margin performance.